Genius Act incoming. Will Nasdaq NDX take off after a 1-month box? Hello, this is Top Trader Jinlog. You can conveniently review the full chart-based report on our blog. For continued market updates, feel free to subscribe or leave a comment. VPAR chart explanation. This is the Nasdaq 100 chart. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white, or medium-term line, orange. Each chart has its own wave tension and trend. Currently, the key point of view is to check the reascending box pattern of the weekly wave swing between the short-term and medium-term resistance supply levels. Investment outlook. NDX is currently positioned in a technical cooling phase with a time-based box consolidation ahead of Q4's anticipated policy event, the Genius Act. According to rhythm structure, the likely scenario is confirm support within the box, right pointing arrow, buy on dip, right pointing arrow, pre-policy breakout attempt. Right pointing arrow, short-term 2 weeks. Expected return range -3% tilde plus 5%, $20,700 to $22,400. Probability 60% midterm, 2 months. Breakout to $22,800 plus possible as policy expectations strengthen. Probability 65% long-term, 2 years. If digital payment systems expand and bond yield stabilizes, NDX may sustain a long-term uptrend. Probability 70% right pointing arrow. Note, monitor AI fatigue and political resistance risks. Summary. Market rallies rarely start suddenly. The current range-bound and slow-moving behavior reflects energy being stored. NDX is awaiting a pre-policy breakout, and as long as support holds, this could be a strategic buy-the-dip opportunity. Key variables. The Genius Act, aimed at digital payment and surveillance infrastructure, is likely to go to vote in Q4, October to December. The expansion of stablecoins, digitally pegged fiat assets, is increasing demand for U.S. treasuries, pushing yields lower. Lower yields support tech equity performance, reinforcing NDX momentum. Within the tech sector, capital rotation toward AI and fintech remains visible. Sector snapshot. Key rhythm sectors only. Technology, XLK. QQQ, right pointing arrow, testing box, top resistance. Direction will likely be defined with policy anticipation momentum. Semiconductors, SMH, SOXX, right pointing arrow, AI flow remains but overbought, cooling underway. Pullback expected until CPI in June. Software IGV, right pointing arrow, high valuation names continue under pressure. Support around mid-band remains critical. Cloud and AI infrastructure, CLOU, WCLD, right pointing arrow, long-term expectations intact but short-term fatigue is visible, hovering near lower supports. Consumer tech, XLY, AMZN, right pointing arrow, consumer weakness plus high interest rates equals continued underperformance, lowest priority within tech subsectors. Chart alignment monthly, extended divergence with price nearing upper Bollinger Band weekly, volume decline and trend weakening observed daily. $21,500 resistance remains intact, while support at the rhythm midpoint is being tested. 120-minute box rhythm formation sustained near $21,080 midpoint. 30-minute downward wave patterns repeating. 5-minute no clear direction, accumulation mode. Rhythm trap, daily midpoint $21,200 remains key to holding pattern. 120-minute rhythm line, mid-band $21,080 resistance at $21,500. Support at $20,700. Current price remains within a clear box range between rhythm midpoints and upper bands. This setup is a textbook rhythm-based time correction pattern per RHYTHMIX VIR 7.0 standards. Scenario paths. Bullish scenario, entry zone $20,700 to $21,100 conditions. Bond yields stay low. Tech rotation resumes. Policy anticipation rises. Targets. Right pointing arrow first, $21,800. Right pointing arrow second, $22,400. Likely by August-September. Bearish scenario, breakdown level below $20,600 conditions. Rising yields, MACD dead cross. Targets. Right pointing arrow first, $20,300. Right pointing arrow second, $19,800. Strategic plan, entry zone $20,700 to $21,100. Probability 66%. Targets. Right pointing arrow $21,800. Probability 65%. Right pointing arrow $22,400. Q4 policy pre-breakout. Probability 52%. Stop loss or reversal if price breaks below $20,600. Probability 70%. Outlook. With the Genius Act expected in 5 to 6 months, the market typically begins pricing in 3 months ahead. Hence, the next 1 month may be box-bound with limited breakout potential. Expect a clearer direction around August-September as pre-policy optimism increases. Until then, risk control and box support validation remain essential. Deep dive report. Bond yield trends. 10-year U.S. Treasury yield has pulled back to 4.33%, creating a supportive environment for tech. Stablecoin-backed demand for bonds continues to weigh down yields. Yield volatility will remain the key to short-term tech rotations. Institutional flow. ETFs in the tech sector continue to receive inflows. AI, semiconductors, and fintech show relative strength during dips. Key news. JP Morgan officially confirmed interest in issuing its own stablecoin. Genius Act may pass Senate by Q4. Political tension rising due to privacy surveillance concerns from opposition. That concludes the Nasdaq 100 NDX market report for May 31st, 2025. If you found this helpful, don't forget to subscribe or leave a comment. The next critical trigger will likely be June CPI and shifts in interest rate tone.